Hello, everybody. Greg here from Master Trader. So we've been bearish all year, and we're getting closer to a destination target that we've been looking at. So why were we bearish all year? Well, primarily it was based on this igniting weekly bar that I'm putting right here in January. The big wide range bar. There was a breakout failure up at the top. Let me just draw that for you. It was this consolidation, and it broke out and came back in. And when it hit support, it failed, and there was a wide range bar igniting. It came down to that major support level and it had the bounce. And over here, it looked like maybe it was going to be able to get a little higher, but eventually it failed. So now it's coming down to this target area. When we look to the left, we see this support area. And we look at the Qs here, the NASDAQ 100, also coming into the area of this support. Now we simply look to the left. We don't need any Fibonacci retracements, extensions, trend lines, VWAPs, or any of that. We keep it simple because it's what works day in and day out in the time frame that we're utilizing. So as it comes down here, the question is, can it get down there this week? Possibly. Price action today was one in which it started out real negative. It was up earlier, and then on the inflation news, things were down, and it bounced back up. And then when it didn't, it gave it up. It went down. So now we've also got our breadth internal, this McClellan oscillator, coming down to where it was back there in January. So it gives us a reference. In addition, we've got percentage of stocks above their 40-day moving average, which is now coming down to where it was back here in 2020 when things reversed. It's still got more downside. Moving back down, further down I should say, into these green support areas from back at that time, price support, our market internal coming down to a level where it was back at that time. It tells us that we're getting close. We're not there yet, but as I said, getting closer. Taking a look at today, let's just do that. All right, so here's the S&P SPX. And what we see here is the day-to-day breadth. And it's far better than it was back here. So it's not over. We don't have a reversal bar yet. It's coming down into this support. And one of the problems is that buyers keep stepping up aggressively. Like I said in the weekend letter, the buy the dip mentality just keeps stepping up like Pavlov's dog response. Every time it dips, buyers step up again thinking that it's the low. And it happened here, it happened here, it happened here, it happened here. And none of it's been sustainable yet because it's just not into the support area, which it's coming down into now. So should this continue to move lower down here, and let me just adjust this a little bit, to be down in here exactly where we looked in the other charts, give or take. And today, having a failed attempt to move up, again, another 2 days to the downside should be just right to bake this cake for a turn next week. So let's hope that it keeps going down, reaches this area of price support. A couple of vertical down days would just be fantastic if we had continuation moves like this and down like so on. I don't know if it'll get down here to 3,600. That would be ideal if we could get a couple of continuation days to the downside, and then we see, well, if this is down here or lower, that we then begin to get some stabilization. Now, in a bear market, which is what this is, you typically do not get the type of V-bottoms that we saw over the last several years, where the buy the dip crowd just came in and it V'd it and just came back up again. What typically happens in a bear market is when it gets down here, you get a W bottom or possibly a head and shoulders bottom. It just takes a little bit longer with a time correction that the fear that is created by the move down begins to dissipate with some type of failed breakdown, and then it makes a higher low, and then we get what should be a sustainable counter trend rally. So while we look for a bottom in an area here based on everything mentioned. It doesn't mean it's the bottom. But let's see how this progresses in the next couple of days and into next week. We'll update. Join us in the mornings at 9 o'clock at the YouTube channel, YouTube/C/Master Trader. We update market internals, what's happening in the futures market, Bitcoin, gappers, and so on. So join us there in the morning, and we'll talk then. Bye-bye.